Welcome back for another weekly installment of my small account margin strategy. Here's my account overview for the week. It was mostly flat, but technically down about 0.37%. Stay tuned and I'll get into the details. Remember, I'm not an investment or financial advisor, and this is not advice. You need to do your own research for your investments. I'm happy to report that Robinhood still considers me low risk concerning my margin status. I'm 7.86% above the margin maintenance minimum. Once the account drops below 5%, Robinhood considers me high risk. I'm also down to only $16.69 of buying power available, and most of that isn't really available to me. Most of it is just funds left over from a Robinhood Gold refund when I transferred the payment method from my investment account to my Robinhood Gold card. Let's go check out the margin screen. So again, here's my buffer, about $170. If I were paying interest, the interest rate would be 5%. However, as a Robinhood Gold member, I get $1,000 of interest-free margin, which is what I'm using for this experiment. Here are my margin maintenance requirements. All of the funds except for NVII have a 25% maintenance ratio. NVII has a 35% rate. I don't really have to pay attention to this margin maintenance requirement. Since this is a small account, the $2,000 margin threshold is really what I'm worried about. Here's a look at everything that's in my investing account. All of the positions with this little symbol right here are cryptocurrencies. And all of these are rewards that I won from various Robinhood promotions. In fact, I got this one just this week, one entire share of XLM valued at 16 cents. All of these added up, I think, are about $11. So it kind of skews this individual account amount a little bit, since these crypto deposits are not really part of the experiment. However, I plan to keep them just to see what happens. Now let's take a look at each of the individual high yield ETFs to see how they did over the week. As I mentioned earlier, the account as a whole was down about 0.4% over the week. Blocks was down almost 3%, currently trading at $15.77. My average cost is $16.61. So hopefully that one will turn around soon. Here's Chippy. It was flat this week, down just a hair, currently trading at $69.94. My average cost is $57.03. So I've been really happy with the recent performance of this fund. Here's my new one, NVII, down a disappointing 3.3% this week, currently trading at $26.61. My average cost is 10 cents below that. So even after a bad week, I'm still up a little bit. Let's check NVII, the fund I sold last week. It was down a little over 4%, so slightly worse than NVII. Finally, my SPYI shares were up a little bit, about 0.82% over the week, trading for $52.65, and my average cost is $51.14. I don't really talk much about the price of my PAAA shares, as it's fairly predictable. But as an example, this week it lost 0.23%. But if we scroll out and look at, say, a year, you see this sawtooth pattern. It builds up over the month and then pays out the dividend, dropping the share price. And then the next month, it builds up again. It's behaving exactly the way instruments like this are meant to behave. This up and down pattern is normal and doesn't concern me at all. So far, I've been happy with the way PAAA has served as my anchor. In fact, I've had to add to it several times over the course of this experiment to get myself out of margin trouble. So how about dividends for the week? I received my first NVII dividends, almost 18 cents per share for a total of $1.30, and that represents about a 33% annualized yield. As you can see here, the entire $1.30 were reinvested back into NVII, which was a mistake. When I purchased the shares, it automatically turned drip on, and I didn't think to turn it off. So by the time I noticed the dividends, they had already been reinvested. I've since turned the drip off so that I can get back to investing half into SPYI and half into NVII. And as you can see, the $1.30 rests neatly at about 50% of the dividend that NVII paid me. This last one was $2.61. But I'm pretty happy with 33% annualized yield, if that means that my NAV will be stable or even possibly grow. Blocks paid almost an identical dividend to last week, 10.76 cents per share, 2 weeks in a row of a 97-cent payout. I split that dividend and was able to reinvest both halves. And this is in keeping with Blocks' 36% annualized dividend goal. Chippy paid me almost 60.5 cents this past week for a total of $1.73. And that represents about a 45% annualized rate of return. I was able to reinvest half of it into SPYI, and the other half will sit until next week when I can combine it with that dividend before I can reinvest it back into Chippy. If we take a look at my SPYI position, you can see I'm up to a little over 4.1 shares, which I think is great. And as you can see from the log, that represents over 60 purchases. So all of these little purchases are adding up and have become something at least somewhat substantial. 4 entire shares is not bad. I'm really happy with that. My total return summary is sitting about the same. The original 4 ultra high yield ETFs that have since been replaced now sit at a total loss of minus 46%. When I combine that with the profit of the SPYI reinvestments, the portfolio is sitting at about minus 25%. PAAA is not included in this calculation. It just sits up here and does what it's supposed to do. No large swings, and it brings in a few extra dollars every month. I hope you enjoyed today's update. Please consider liking and subscribing if you found this helpful or entertaining. I certainly appreciate all the subscribers, and every time you like a video is a little boost. Remember, nothing I said here today is financial, investing, or any other type of advice. I'm just inviting you along my journey. And if you'd like to learn more about my small account margin strategy, check out the first 5 videos in the series. Good luck hunting those infinite dividends. Take care.